You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean but one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you were mainlining this week. Took a little bit of a hiatus, a journey, a sojourn, if you will, down to Florida to check out the Futures Industry Association conference this year. Always a fascinating event. A lot of talk about options, options flow, and everything else. So it's not just futures, listeners. A lot of intriguing stuff. Some content will be hitting the network from that, including a chat with folks over there at SIBO, but all the stuff they have cooking over there in terms of all the things you guys and gals love, 0-day, 1-day VIX. Is it going to become product? All sorts of fun. You can check that out on the network. If you want to check it out sooner, then theoptionsinsider.com/pro is the place to go. We'll be hitting there first for our pro members, so stay tuned for that. Of course, if you're in the pro, you can hang out after the show and join us for a little bit of options oddities, which is always a fun way to end your broadcast week. And if you listen to that show, you don't at least come away thinking, man, there's a couple of names I want to check out in there, some trades, then you just weren't listening hard enough. Andrew, whenever he leaves, he always has a whole list of names he wants to trade after the show. Problem is, the markets are closed by the time the show is done, so we have to wait until Monday. But that is the fun and the danger of options oddities. You want to check all that fun out for yourselves, as well as pro Q&As, everything else, theoptionsinsider.com/pro. The place to go to learn more as we go around the horn and learn who's joining us on the old Volatility Views program today. Since I did just besmirch him, it's only fair that I start with him. We are joined this week from the shores of Maine by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. We missed you down at the big Futures Industry Association Expo. I know it's your favorite show of the year, sir. I'm surprised you missed it.
I just realized the oddities comment. It's probably better that the market's closed because it gives me at least a weekend to,
to talk yourself off the ledge,
to talk myself off the cliff. So I love the Overby saying, what is it? I lay down until the urge, idea.
Yeah, lay down until the urge goes away. Yes.
Till the urge goes away. Yeah. So, but I do keep that list, and I actually have my list is called it's the year low list. So, and I watch them and I go, wow, it keeps going low. So it's an art and a science, I guess we could say.
It is indeed. If you want to see all that fun, stay tuned for oddities right after this show, listeners. And then also joining us on the old guest hot seat this week, someone who did attend the Futures Industry Association conference. I can attest, I saw him in person. I do have proof of life. It is Rob D'Arco, the CEO over there at Rival Systems. He's been on the network, but it's been on our interview show, and it was back in OIC of 2018. So it has been quite some time, and this is indeed his first appearance on Volatility Views. Rob, welcome back to the network, sir. It has been too long.
Well, thanks for having me, Mark, and great to meet you, Andrew. I'm very excited. It's been way too long. I remember back at OIC in 2018, the talk of the conference was low volatility and when are things going to spike.
Yes.
And I thought it was like deja vu until this morning. And, the VIX is actually heating up here. So maybe having me on the show is sparking something happening in the VIX.
There you go. You are the catalyst. Yes, it seems like we're a long way away from the lazy days of 2018 when we're complaining about the aftermath of single-digit VIX. No one talked about zero-day options. There were no pandemics on the horizon. None of that stuff was in the offing back in 2018. But here we are, 2024, and things are crazy. Before we dive into all that craziness, Rob, like I mentioned, this is your first appearance on Volatility Views. A lot of new listeners out there, maybe not familiar with what you guys do. So let's start there. Give us an overview of your background in the world of options and indeed volatility, as well as what it is you folks do over there at Rival.
Yeah, so I think most importantly to start with is I'm not a trader. So anything I say during this this show, take it with a grain of salt. But I have been in the trading industry for over 20 years, but always on the technology side. I started at a big proprietary trading firm called Ronin Capital back in 2002, right when things were just starting to trade electronically when SIBO was going hybrid. So, I mean, that seems like that was forever ago. Worked there, built up all of the options trading and risk management systems. And in 2015, we took my whole team and spun out, and that's when Rival was born. And we've been selling to larger proprietary trading firms, hedge funds, FCMs, broker dealers, banks, basically all professionals in the trading industry. And we have a few different products. We've got the legacy Rival Trader product, which is still being used today by people trading in market making and the VIX options and SPX and even OEX. I think we're the only third-party platform that still supports the 1.5.
Wow, you're the one still running the 1.5. That's you. Wow,
the 1.5, baby. You gotta love the 1.5.
We joke about the 1.5 here as a relic of bygone era, but you're still crunching the nut. Good for you. Someone's got to fight the good fight.
So exactly. But then we have their new platform called Rival One. That's a cloud-based platform it's a multi-asset platform to trade futures, options, equities, and crypto. And then we've got Rival Risk, which is our enterprise market risk platform, really used by heads of firms, risk managers, to look at risk across thousands of accounts across all the asset classes people might be trading. And one other thing that I wanted to mention was that back when I was at Ronin, there was a options training course. So I learned everything I knew about options from working with options traders and risk managers. But they had this great online course that everyone would take, and it taught us everything about options with quizzes and tests. And my guess is some other of your listeners probably went through that same course because it was very good. And so we took that content when we spun out, and we're going to be putting that on our website. We've updated it. Obviously, there's lots has changed over the years, so we've made some updates, but kept all of the good stuff in there, and we're going to be putting that on our website. Free for everyone to use, probably in sometime in April. So excited to help educate the market, get that information out there, and spread the good word.
I can attest to the quality of that program. I may or may not have had a hand in developing it along the way. In fact, we put all of our new clerks back when I was at Stafford through that program. They were the guinea pigs, and then we'd give them the feedback, what we liked, what we didn't like. One of the best things that you probably took off and maybe might be fun to add back, the timed aspect. It was designed to train market makers. So you couldn't just get the right answer. You had to get the right answer within a time limit. And so that added a certain degree of terror to the whole thing. So
Exactly.
I don't know if today's retail person who wants education can handle that degree. Maybe we'll call it like, the plus, the bonus, the nightmare mode, whatever you want to call it. But I think there's something fun. But I can't attest to, I haven't seen that stuff in a while, but I can't attest to. There is some intriguing content there. And speaking of intriguing content, it is time to sink our teeth into it, listeners. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, some of our trading and trending and analysis and unusual activity perspective out there. And you could tell there are a few Chicagoans floating around our pro chat because they're already talking about St. Patrick's Day. We're not even there yet. It's not even the weekend yet, guys. Hold your horses. I understand you're excited, but wait till they dye the river green and all that fun. That's coming in a few days, but not quite yet, unless you're listening on the weekend, in which case, enjoy all that St. Patrick's Day fun. Not a lot of fun going on in the market today unless you're into a little bit of red on the screen, maybe a little bit of green on the old vol screen. Maybe you're one of the folks out there who was kind of wringing your hands saying, maybe I think VIX is a little bit too low. Well, then you are having a good time out there because that's pretty much what we're seeing right now. S&P, they keep trying to drag it lower. It's off about 0.75% right now. It did sell off a little bit below. Looks like it bounced right off pretty much to 5,100 level, right around 5,105, and is starting a little bit of a turnaround now. We'll see how that progresses. Is it just a head fake before we turn back down again, or are we going to continue the rally up? It's off nearly 40 handles right now. So this week's kind of been a weird one. They do seem like they're disenchanted with some of these levels. We have seen testing some lows and testing some lows again intraday. NASDAQ getting clobbered pretty aggressively yesterday, coming back today, taking another 1% off the top, almost 1.1%. The Dow off 0.6%. Speaking of getting clobbered, when we were talking on the option block yesterday, small caps off nearly 2%, just an annihilation of small caps. And today, like we said for a while, small caps just kind of do their own thing. On a day when everything else is kind of gently selling off, small caps get annihilated, and then now everything else is selling off fairly aggressively, and small caps are pretty much unched. So, again, they kind of move to the beat of their own drummer out there. All this a long way around to saying we were, and Andrew, I want you to remember this at the end of the show, but we were, right at the start of the show, we were within pretty much 1/10 of a point for me. I'm at 14.85 in the crystal ball. We were at 14.95 when we kicked off the show. So I'm going to declare a little early victory just for fun because I've learned through bitter experience that vol could be many, many points away from where we were at the end of the show from where we started. So I'm just going to put that nugget out there now. Maybe an early victory. I've learned from Options Queen and some of our pro members. Take the victory when you can at a 15.20 right now. So already moving away from my prognostication, up about 1/3 of a point right now. VVIX, remember we just said on the show last week, listeners, when it starts getting into the mid to high 70s range, you kind of have to start paying attention because VVIX tends to not hang out there for very long. Coming into the show today, it's at a 92, up another 8 points over the course of the past week, and over the last couple of weeks, up quite a bit, obviously. So a lot to unpack out there. Since I did besmirch you, I will go out now to the land of the shores of Maine. First off, Mr. Rock Lobster, how excited are you to hear about the 1.5? Did you ever trade the 1.5 in your nigh on 5-decade trading career now? And then B, I never touched the 1.5.
I never did. I mean, my DPM was by the OEX when it was still kind of a rockin' pit. But no, I never did trade the 1.5.
Yeah, I walked on the floor of the SIBO right kind of in the tail end of the OEX. OEX was just falling off. The S was taking all of its thunder. And then we all know kind of how that played out. But I remember hearing of the 1.5 in my early days on the floor before it kind of went the way of the dodo out there. So yes, a vestige of a bygone era, listeners. But Mr. Rock Lobster, a lot going on out there today. Kind of a topsy-turvy week. What's been catching your eye from a vol perspective?
Well, we've had that same, like I said, I keep tweeting this same annoying tweet because it's annoying. So we have higher lows in VIX, but it doesn't go up. So basically, I just like the compression of the range is crazy. Now, I saw something from Vance trying to maybe there's some zero DTE and somebody's, some smarty pants has come up with an ARB. I could see how that could be possible, but there could be some pretty heavy slippage with like short VIX future and like short-term vol. So I don't know how that would work. So I think it's just mostly, again, if I'm in the SPX, like back in the old days, which is a long time ago now, your market goes up really hard, at the money vol gets pulled up, and VIX just volatility. I mean, there was no VIX back then, but vol just doesn't go down. The at the money stays at like a 10 handle, or back then 10, 11, whatever. It never goes down. It just keeps getting dragged up. I think they call that sticky delta. I think what is it? There's like Ewan Sinclair, one of the really good vol writers. Some professor coined sticky delta, sticky vol, which I think is good. Is you just have to trade it to understand it. You're like, oh wow, the delta of these options, the SPX moves, but the delta doesn't change. Well, how is that happening? So that's definitely a vol expansion, and I just think because we went so hard so fast, that was what I would. At least I see from that point of view. So VIX, hard to believe we haven't been we're in all-time highs and we're nowhere near a 12. It feels like it's like 5,000 miles away at this point. So, and I can't, to be honest, I can't think of anything that would happen in the next month that would get vol to a 12, even with realized vol as low as it is. So you've had this sort of sneaky volatility where you just, the weekly ranges are relatively big, but your close to close is relatively low, and it kind of tricks, those. You have to kind of read between the lines, and that's what we have. So, like, you have this compression in range for VIX as we rally, which makes sense because stocks are kind of going in one direction for the most part. Today being, an exception if we actually close lower. So that's the one thing, and that has not gone away. The second part would be just the relative price of like let's say 9-day VIX, like short-term VIX, to the cash. So in a bull market, generally you have the short-term vol expectations are relatively low. The short-term vols and SPX are lower. Now you have the weekly, so you have this kind of daily feedback, and you have that lower vol. And today, again, going into the weekend, going into the FOMC next week, all this stuff, we have another lift in 9-day volatility, and it's staying persistently higher than VIX cash. So the market is still like these 9-day, all this zero DTE stuff dampening down vol. Not today, not this week, even when the market didn't go very far. So I could see somebody's making some money somewhere, because from a dealer point of view, if they're getting the zero DTE vols for nothing, and then they're able to jack up volatility 2 weeks out or be able to sell it for higher prices, they should be doing okay with that spread. And there's no reason for them to let it go away. So anyway, that's those are some of the larger things. And then, finally just, okay, what do we have for a curve? So you have some real, what I would say, historically bizarre signals that are, since I've been watching VIX now for like 10 years, just odd signals. And like Mark and I would be like, normally we would expect a little bit more of a tank in SPX when you see this like kind of short end of vol get a little more expensive, but it hasn't materialized yet. So I don't know who's doing all the buying when they need to do the buying, but like the sellers just never really appear. Maybe today would be a day, but like once again, we're down 0.75%, and everything kind of stops. So we'll see. But I don't, at least at this point, even though the vol says we should be going lower at some point, it just doesn't happen. And that's my biggest observation. A 0.75% move, and we're only what, 40, 60 points from the all-time high or something, SPX. I can't really count that as a sell-off. It's just we're not going up. I'll leave it there for my big three observations.
Speaking of things just appearing, some volume just appeared as you were talking in VIX, like 600,000 contracts hitting the tape while you were talking, Mr. Rock Lobster. So
wow,
a lot went from about 400,000 to over 1 million now. So I think we'll have some stuff to sink our teeth into in a little bit.
I gotta find it.
Yeah, but before we get there, Mr. Rob, as Andrew just laid down, obviously an intriguing week. It's still kind of a head scratching period in the vol space. As Andrew was alluding to, people are kind of lamenting that the upside is not really exploding, and then also if you have puts in your back pocket, not really making a lot of bank there either. So it's an intriguing, also a frustrating period out there. What's been catching your eye, and also what are you hearing out there from your clients and the prop shops you're working with as they're navigating this environment?
Yeah, so I think what was interesting this week, obviously, with VIX spiking up today, it seems like it's driven by some of the inflation concerns. There was the CPI number that came out, was up 0.4%. Yesterday, the PPI number was up 0.6%. And then you also had consumer expectations that were up, and the 1 year was up to 2.7, the 5 years up to 2.9. All of those above the Fed's desired level of 2%. So there's obviously a concern that is the Fed going to be able to lower rates anytime soon, or are they going to have to keep them steady, or worst case, are they going to have to reverse course and actually increase rates? And I think the longer the market stays in this high rate regime, or if it has to increase rates even higher, seems to me like that's when something ends up breaking in the economy. And just thinking back, how things have happened over the past 20 years since I've been in, seeing this sort of cycle happen over and over. Obviously there's stuff going on in the commercial real estate market. We've got the banks that have had issues last year. So I was actually talking to a client who has been one of the biggest VIX traders, and I think he understands everything really well. And he said, you're never sure what's going to light a fire under the VIX, but there'll always be something, but it's never what you expect. And so even someone who's been trading it forever is just resigned to the fact that at the end of the day, there's going to be some shock that people didn't see coming. So that's we'll see what happens, with the Fed meeting next week. My guess is they're probably, obviously, they're going to keep things steady, but what's going to happen, what sort of indication are they going to give to what they're going to be doing in the future? So we'll see. But, that's sort of what's piquing my interest in the short term, and then seeing what's going to happen over the next few weeks. Also, just in general, if you talking to other traders as well, the SPX is, I think it's still above the 50, 100, and 200-day moving average, which just in general, I think the VIX just become subdued, and there's just lots of complacency in the market, and we've seen periods of like that positive correlation between the VIX and SPX. Obviously not today. There's little spikes of it, looking at the charts, like there's periods where they do move in the same direction. And I think, it's people still believe that it's still driven by the AI stocks, right? It's such a huge percentage of the S&P index. Like I believe it's at least 28%, depending on which stocks you consider related to AI. And I feel like that's sort of masking things. It's putting this upward pressure. Nvidia is up 1.2% today. AMD is up 3% today. So it's putting this sort of upward pressure on the SPX, even as other things are happening, inflation concerns. So in my opinion, I think that's sort of why we're seeing this sort of steady trend up in the S&P, but then VIX starting to slowly move up as well.
I like that. Even the size players in VIX don't really know what sets it off. I think.
Yes, don't feel bad.
I think that speaks for a lot of us out there. We're like, what is going on out here today? But yes, everyone I think the more prolonged exposure you have to products like VIX, the more you kind of shrug your shoulders and say, okay, yeah. It's like the guy said when I first walked on the floor of the SIBO. I don't care what the underlying was. Why is it up? Oh, more buyers and sellers, kid. And you thought they were idiots. And then in hindsight, you realize they had a certain degree of wisdom to them. But Rob, like we said, you've been around this space for a while. You work with a lot of the kind of bleeding edge on the vol and trading side in terms of the prop shops putting up SPX, even some legacy 1.5 every now and then. As you just mentioned, VIX as well. Andrew was just talking about some of the nearer dated contracts out there. This has been a interesting point of consternation and debate for a while. Of course, in 2022, everyone was lamenting that the markets were broken, VIX was broken, it wasn't popping enough given the sell-off we saw in the broad market. A lot of people were blaming zero day as a result. A lot of people have also kind of expressed the view they think zero day is maybe muting some of these vol moves that we're seeing out there right now. What are you hearing and seeing from the firms you're working with on the prop side right now in terms of these products? And also for yourself, you've been around the vol space and around the prop trading world for a while. Where do you fall on these near-dated, let's call them, because not all of them are zero-day, but these near-dated contracts that seem to be consuming everyone out there? Are you a fan? Are you not a fan? And what impact do you think they're having on the ecosystem as a whole?
I'm a fan of them. I think, anything that's going to bring more people to the market, more activity to the market is a good thing. I think, from a hedging and a risk perspective, it really helps people isolate risk exposure and do specific option strategies, to hedge a very specific risk that they have, as opposed to having to trade something that expires in a month. You're able to more specifically isolate that risk. When we were at the BOCA conference, there was a panel where it was, the exchange, the SIBO, president of the SIBO was up there, and I was, I'm sure other people knew this, but I think he said there was 50% of the volume is in, it's in 1 day or 0 day to expiration options, and 30% of that is retail traders. So what's interesting to me is like that has to change. Like if you're from a traditional market making standpoint, when you're trading something for edge, right, and you're keeping that position on and you're managing the risk of that position over time, just when the majority of the volume is happening on the day of expiration, I think that just has to change your mindset or your approach to trading and managing those positions. Before on expiration, you wouldn't want to do anything, right? Like you built this position up for months and you sort of had it perfect and you just wanted to, sort of manage it on that day of expiration. Now, like that's where all the action is, right? So I haven't, specifically talked to traders about this, like liquidity providers about this, but it has to change the way that, they're approaching things. And actually I was listening to the show you had yesterday with Henry about the whole increase in market maker to market maker or, liquidity provider, volume, and part of me is thinking, well, is this part of that? Is it like there's such a huge demand curve in the market. If you're looking at the skew, it's a traditional demand skew, and basically people are buying all these options, and the market makers need inventory to sell, right? Like their job is to turn over the trades and provide that liquidity, and maybe they've got to go to other market makers to get more inventory. So I don't know, but it's I think it's obviously shifted the way people trade. It's shifted where the volumes are trading, and it'll be interesting to see as they expand it to more product classes, more individual stocks or other types of products, what the impact is, and if we see that spread even further, or if it's something's sort of unique to the index side of things. I also think just in general from a curve standpoint or a volatility standpoint, if you're looking at the current skew, I think it's really relatively flat or low to where it traditionally has been. And in general, that means like the 25 delta puts are probably relatively cheap. Looking at the curve today, like it seems like VIX has gone up, but the skew's gone down, which it seems interesting. But that's probably all demand driven, right? So people want to keep buying those call or buying those out of the money options. And I think one key thing though for like the users out there or the traders out there that are relatively new to the market, what you want to make sure you're looking out for is that tilt risk or skew risk. We call it tilt. And that's a sensitivity to the puts, vol on the puts going up, vol on the calls going down. And it's important to look at that. So, because skew is going to go up at some point. How quickly it'll go up is, anyone's guess. But if it goes up really quickly, you want to make sure you understand what your tilt risk is. We also do things like look at risk reversals. So synthetically, how many risk reversals do you have on, buying the 25 delta call, selling 25 delta put, so that you can very easily see, okay, if I need to get flat skew, how do I need to quickly execute that? So those are sorry for the long-winded explanation there, but those are the things that sort of we're talking about with the clients, or at least I'm hearing people talk about in the market.
I like it. Listen into the option block. Better watch out, Rob. You're going to turn into a fan of the network pretty soon. And next thing you know, you're going to be listening to all of our shows out there. But you're right. That was a great little nugget that Henry dropped on the show yesterday that I was surprised at as well. You don't hear about a lot of market maker to market maker flow out there, and yet that's what he's seeing. So that is fascinating and kind of head scratching in and of itself. Add that to the legion of head-scratching and or fascinating data points that are hitting us all the time in these markets right now. Just like the volatility surface. Man, halfway through the show, we haven't even gotten to the futures yet. That's how much stuff is popping off in the world of vol this week, listeners. And as you might imagine, the front portion of the curve, as we continue this little bit of a dance with red on the screen here, is starting to firm up a little bit. When we were coming into the start of the show, the front portion of the futures curve kind of down to slightly flat. As we're coming in to start the show now, that March future ticked up about 0.2 right now. So it's swung about 1/3 of a point to the upside now. The April future is kind of unched up about 0.05. Not much there, but that was also down right when we started the show as well. So starting to firm up in the front. Are we going to head crazy backward? Probably not right now, but starting to trend in that direction. In terms of the structure out there right now, still over a 20 handle out in that October timeframe, actually over a 21 right now, 21.3 as of a few minutes ago out there in that October future. So you're shooting up over 6 points now from that cash hanging out at about 15.25, which, by the way, cash in the March future, because of course March going the way of the dodo pretty soon, pretty much hanging out in lockstep, both hanging out at about 15.25. Then we shoot all the way up to 21.30 in the October future. So pretty healthy contango out there. We'll see if the March future can get a nice little jump before it goes away and we get a little backward, but not right now at least. But yeah, healthy contango out there. Mr. Rock Lobster, what's catching your eye out there in the vol surface this week, sir?
Well, you got this. Didn't Goldman put out like today's VVIX calls? I believe that was their. It was all over the place. I think they
that's
wanted
the
you to buy the 16s or
that's the 600,000 that went up. They bought a ton for their book first, then they put out the notice, right?
I know. I mean, I hate to think ill of people, but it is Goldman.
Oh, did I say that out loud? I'm sorry.
Oh yeah. So you know what, well, I do agree with them in one part is that, so one thing I look at is how much VIX calls cost relative to the cash. Because for listeners, the VIX options, traders use the VIX futures to hedge their VIX options. So while VIX is nominally the underlying price, the actual underlying price until expiration is whatever the future is for the term. So right now, when you have this big contango, right? So the futures are higher above the cash. So if you have a higher underlying price, that's going to mean that your calls are going to be more expensive relative. So you need that future to do more work. And a lot of times how the vol curve works is like the first move is just going from premium to flatness. So you don't get that early performance out of a VIX call. I mean, they're going to go up some, but not as much as you think. And then all of a sudden you kind of get to this flat area, which is kind of where we are now, getting there, where the calls, your VIX calls are relatively close to the cash price. And so they look relatively inexpensive. Like, so right now, like with the VIX cash is trading like 15.20-ish. The 17 calls are $1.30. The 16 calls are $1.60. Again, this is in the April cycle. So that is that's not super expensive. The 15 16 strangle for VIX is $2.50. If you've looked at VIX for any period of time, that is not a very expensive strangle at the money when you're trading at a 15, because it's usually a bull market. VIX can go back to 12 pretty easily, and that 15 put would be worth maybe $3. So it's a low risk strangle to purchase in general. But right now, you could pretty much have all you want to eat at this price. So now that might not be what it is on Monday or Tuesday, but for right now, like you're in the compression phase where all the options are kind of getting cheaper, even though VIX is going higher from, I would say, like a relative vol sense relative to the cash. So like a 17 call is relatively where VIX is relatively cheap. Like it's a cheap dollar spend. And when you haven't been over 17 or something, or for, I think we touched it maybe for 2 seconds on that squeezy day in February, but for the most part, it's been 4 or 5 months of no real jump in VIX. So all these options are extremely inexpensive, in my view. So I did add a little, I added some call flies, 10-point call flies in there. I haven't added more. I was kind of waiting to see how things rolled into the Fed, because the way I look at it, there's not a lot of edge for me to kind of start a trade here. Just getting all happy with the calls. So, but they're cheap enough relative to take a little dip. So I would say that's the first, kind of the first element is the front of the curve flattens up a little bit. And, usually you get some kind of action. And March is trading about flat. With only, it's only 3 or 4 days to go at this point. And the April ordinary is 16. So, I mean, without a lot of work, you could see, a pretty flat front end, going into the FOMC next week. And maybe, I don't know, but maybe this is the time of the Fed says, well, I don't think we really should be talking about lowering rates anymore. We might have to raise them again. Which could be what everybody's sort of buying the juice for. Now, again, it's total speculation on my part, but I'm trying to find a reason why. And as Rob just said, and we joke on this show all the time, the Sith Lord has yet to reveal who's the other second. Whatever the reason is, has yet to reveal himself or herself, and that's kind of where the curve looks to me. Like, don't have a reason for it yet. The only one I can think of is just having the vol dragged up at the money. But generally with VIX, where there's smoke, there's fire. So it just hasn't. Again, I lean a little long when VIX gets a little flat like this. Doesn't mean I won't change my mind and buy some VIX puts, but this is the first time in a while I would say I don't own very many VIX puts relative. Normally I have a ton of them. And right now I have like relatively tiny amount, probably 5% of what I would normally have. So we'll see how it goes, but it is a interesting but uninteresting VIX curve right now, is what I would say. That's what the surface looks like. Interesting but totally uninteresting from a trade point.
Interesting but uninteresting VIX curve. There we go. Add that to the legion of flummoxing data points and indicators that we're throwing at you throughout the show here. Rob, same question for you. Do you also find this curve interesting but uninteresting, sir?
I find it interesting, it just because I think because there's so many different things, sort of different factors at play, and I almost feel like they're all kind of canceling each other out in a way. So to me, that's just it's just really interesting to see how that all works. But I think one thing that I see is we're talking about sort of the the vol going up. I think the realized vol the realized vol on the up days, within the S&P are higher than the realized vol on the down days. And I think that's driven by, the big moves in the AI stock, kind of like I mentioned earlier. They're such a big part of the index. When they're going up, that's sort of dragging that realized vol up, and that's sort of why maybe the VIX doesn't move in the traditional way that it has in the past with the SPX. I sort of the flip side of that is, if there's something that comes out in relation to these, AI stocks, that where it puts some down pressure on them, you're going to see, a significant drop off, I believe, because it's sort of the opposite effect, right? Because if they're on the way down, they're also, heavily weighted. So, we'll see what happens, in the AI side of things. The other interesting thing to me, you sort of mentioned it, is, if you look at the October future, it's up. There's sort of this kink in the curve where it goes up in October and then back down in November, and I assume that's because of the election. But I'm curious, obviously the election is until November, so it's after that October future expires. I'm not sure why you wouldn't see it sort of continue to go up, and maybe you guys hopefully know more than I do in that. But I would have expected, sort of October and November to be up, given kind of the uncertainty of market, or maybe it's, maybe the election, like things going up to the election is the most volatile, but then once the election's done, maybe things calm down. I don't know. What do you guys think about why it goes up in October and then down in November?
Yeah, I think the October expiration cycle is November. November? What's the election? November 11th or something? I can't even remember. 3rd. So the October future is going to have the juice in November from SPX. So I think that's part of the reason. But yeah, it's for sure. And it was there the last cycle. Remember when we thought like the election was going to happen and it was going to rain cats and dogs and blah, 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 blah. So didn't happen until January, but that was part of the whole curve last time. It just that artifact never left. And nobody, there was, there's no sellers of that vol out there for the cycle. So It's like you can't get it back.
It's that October surprise juice, right? That's always where something weird hits the fan. A Hillary email, pick your poison out there, right? October is always where it seems like the crazy mad. I mean, not to undersell November. It's still fairly juicy. As of a few minutes ago, it was almost a 20 itself. It was a 1985. But you're right. It's about a 1.5 below the October future. So clearly they are pricing in those last couple of weeks. A little bit of kink, a little structural funk, as well as a little bit of October surprise. A little bit of column A, a little bit of column B sprinkled on that October future out there. Man, we're coming up against it. We haven't even gotten to VIX options yet. That's how much is popping off this week, listeners. Let's get there now. Like I said earlier when the Rock Lobster was talking, he spooked or motivated somebody because a whole bunch of VIX options hit the tape right around that time. We were hanging out around 400,000 contracts. Now we're well over a million, 1.08 million. Right now, the ADV 703, that's actually down 7,000 on the week. I got a feeling after today it's going to be moving in the other direction. We'll get to all that paper hitting the tape today in a second. First, let's get out to the top 10 size positions. What's open for size in VIX options right now? Let's find out together, shall we? By the way, if you're out there, if you're fighting the good fight for the puts, you will be happy because this is the first time in a long time that I can remember 2 puts making their way into our top 10. Usually we're lucky to see 1. This week, we have 2, including number 10, 183,000 of the March 13 puts. Those go back to, I believe, a few weeks back. We talked about somebody loading up on a bunch of those. I think they paid 18 cents, as I recall, out there. Spoiler alert, they're probably not going to work out, but still a little bit of time left on those bad boys. Either way, 183,000 of those for number 10. Number 9, 187,000 of the March 16s over there for number 9. Then number 8, we have 209,000 of the May 60s. Right back at it, listeners. Number 7, our old friend, 213,000 of the AUG 47 halves. Number 6, our second of 2 puts in the top 10 this week, 213,000 of the March 14 puts. Those clearly have a little bit better chance out there. Number 5, 216,000 of the March 47 halves. Right back at it. Number 4, 227,000 of the May 47 halves. Number 3, 275,000 of the March 17 calls. Number 2, 301,000 of the April 20s, and the number 1 size position in VIX options this week, 363,000 of the March 20 calls. If you're listening to some of our shows earlier this week, you heard us talk about, looks like they're doing some of these. I'll probably get to it here when we get to some of the paper. Looks like they're rolling maybe to putting up some of this 1x5 on some other strikes now, not just the 47 half, but we'll get there. Let's get this first. What lit up our tape out there today? Because we were sitting on pretty much a whole bunch of nothing. And then all of a sudden, bam, as VIXs want to do, it just came roaring to life. In this case, it looks like the May-June 35 calendar spread went up 150,000 times, listeners. Looks like paper bought it. I had the price here before. I think it was around 13 cents, if I do recall. Let's look really quickly. Yeah, 13 cents. Bought the June for 59 cents. Sold the May, looks like, for 46 cents. So again, I know this week on Vol Twit, our buddy VIXologist and others who will be joining us on the show this week, so we'll put it to him next week. A lot of people were wringing their hands over what the hell's going on with the middle portion of the VIX curve. What is up out there? Obviously, somebody coming to play out there for size today to the tune of 140,000 of this calendar. Mr. Rock Lobster, off the top here before we get into the rest. Are you a fan of this? You like this May-June 35 for 13 cents?
I was trying to think but if you're doing that to get long, wouldn't you buy the May and sell the June?
I didn't say I liked it.
Yeah, I was trying to figure out, this is we need the flow master, because I like to see the direction, because if they're buying it so they don't think, so if you're buying it, okay, and then there's no event, so you have some free 35s in June, I could see that. But it's just it's a weird, I feel like they want the June juice for the calendar. And then again, weird one, just I see why they would want to do it. If they have the calendar, they just skate through and then the Mays just go out worthless. And then they're left with the 35s for small change, going forward. So I see why they have, but I'm also, I guess if you're putting on 150,000 contracts, the margin's not that big a deal for you. but I find it a curious spread, because it's like, how does it pay is my next question. Like, and the only way I can think is, either you have a parabolic move and the May pays you if you're long it and short the June, or just the Mays go away.
Yeah, you sit on your hands,
kind of riding it out.
Have a boring May later, and then you hit 100 in June. That's how it pays you, right?
Yeah. Yeah, it is a little bit of threading the needle there, I think, but doesn't mean it can't happen.
I could see chewing some nails down in May if we get a little bit of action out there in May. But yeah, this one, it's a weird, we don't see a ton of size calendars that are, this is, I should point out too, this is all opening. So we see rolls quite a bit, but we don't see, size opening calendars. Like, again, kind of speaking to the funky nature of the vol surface this week, which again, a lot of people have been talking about on Vol Twit this week. So I thought this spread will certainly add more fuel to the fire. Let's get out some of the other trades that are lighting up this week. Man, we're already coming up against it. Crazy how much is going on this week to sink our teeth into. All right, behind it, number 3 today, we have 50,000 of the AUG 42 halves. Again, that goes back to our friends maybe going down a little bit lower on the strikes from the 47 half to the 42 half, or maybe they inspired somebody else to do a similar 1x5, but on lower strikes. Either way, 42 half starting to light it up as well. Number 4, 45,000 of the June 45s. And number 5 today, 38,000 of the March 20s. Yesterday, also a banger day. We have multiple 1 million contract days this week, which we didn't see that last time when Powell was talking, but we're seeing it this week. We didn't see it during NVIDIA week either, but we're seeing it this week, which again, kind of weird. Again, people, I guess, are not used to the red on the screen, I don't think. They're so used to the AI lifting everything up that when they see a little red, they get a little spooked. Yesterday, 1.05 million, the big dog. Yesterday, 100,000 exactly of the AUG 42 halves. Again, going back to that lower 1x5 spread. We were joking about 47 half. Do you like it better at 42 half? I don't know. Someone does, to the tune of 100K. Right behind it, 43,000 of the June 14 puts. Also 40,000 for number 3 of the May 60s, 6Os. Number 4, 40,000 as well of the June 45s. And number 5, 39,000 of the June 19s. Wednesday, 1.03 million. So just heavy volume this week. The big dog on Wednesday again, 42 halves. This time it was the July 42 halves, 150,000 of those. So, and again, opening for those as well. So we're in this new paradigm where they're just putting this spread on continuously, but doing it at a lower level. I guess if you liked it at the 47 half, you got to love it at 42 half. Number 2, 37,000 of the March 17s. Number 3, 36,000 of the April 20s. Number 4, 35,000 of the April 17s. And rounding out the top 5 on, again, a pretty heavy Wednesday, 35,000 of the June 14 puts. Tuesday, no slouch either, 749,000, so pretty much 750,000 contracts there. 41,000 was the big dog. That was the March 17s on Tuesday, followed by 39,000 for number 2 of the March 18s. So maybe some vertical action there. Number 3, 35,000 of the March 16s. All call Palooza on Tuesday. Number 4, 35,000 of the April 18s. And rounding out the top 5, one put sneaking in there, 29,000 of the March 13 half puts. Monday, the light day of the week, 543,000 contracts on the tape. The big dog, 33,000 of the April 15 puts, followed by number 2, 24,000 of the March 16s. Number 3, 24,000 as well of the March 14 half puts. So maybe some, and actually number 4 as well, 24,000 of the March 14 puts. So maybe a call against the put spread there, pretty equivalent size. And number 5, we have the March 19s going up 17,000 times as well. Yes, they did buy those March 13 puts for 18 cents. I see that print here now. Back on February 23rd. So yeah, spoiler alert for them, probably not working out great. Rob, we just broke down a whole tsunami of a VIX options paper. Anything catching your eye out there this week, sir?
It just, from my standpoint, I think in these types of markets, risk management is critical. So I just want to be, for people to keep that in mind. I think I've seen it so many times, when things are sort of, in these weird markets, at least that's, when your risk sort of tolerance should, keep that in mind and make sure you have the right tools and you're looking at the right metrics. Like you mentioned, those sort of ratio spreads. If the volatility, goes up significantly, the delta of one of those spreads can flip, right? And so if you're trading that against something else, you can be backwards very quickly. So it's really important for traders to keep that in mind, make sure they're looking at those risk metrics, as well as from a risk manager standpoint. If we're talking about like the correlations in the VIX and how things are moving, traditionally probably 90% of the risk managers are running scenario analysis with the inverse correlation, VIX up or SPX up, VIX down type of thing. But as we've been talking about, that's not necessarily what's happening. So it's critical to make sure that you're running those different scenarios. You're seeing what could happen. You're running maybe a Monte Carlo VAR that's going to run multiple simulations, really taking a holistic view of your risk. And when you're shocking things, making sure you're going far enough so you're catching anyone that's selling a bunch of puts. All of these things that I've seen happen over the years, making sure that people are thinking about them from a risk management standpoint and being proactive, because when stuff happens, it's going to move quickly, and making sure that you're prepared for that, I think, is critical.
Spoken like a man who runs a risk platform or two there, sir.
Yeah.
But yes, a lot to get to. We're already kind of coming up against it. We need to save some room for the crystal ball. So I guess I'll just break down these last few products for ourselves really quickly. Then we'll get out to the most difficult, the most dangerous portion of the show out here. Didn't get a chance to pick your brain on inverse vol products. These, of course, have returned since the last time we chatted. In fact, the year that we last chatted, Rob, inverse vol went away with XIV and has come back since the time we have chatted here on the network. So a lot to unpack. Unfortunately, we don't have time to get into all that right now. SVIX right now, 38.5, up about 0.75 of a point from the show last week. Not exactly lighting the world on fire. 2,600 contracts only on the tape today. The ADV slowly moving in the right direction. 4,600, up about 600. And a lot of people would like a lot more robust options out there. But c'est la vie, the big dog right now in SVIX options are about 5,600 of the March 45s. Those are probably going to go the way of the dodo unless something crazy happens at the end of the day. UVIX hanging out right at 11, right at the strike. So, all sorts of madness is going to pop off there. That's down to 1.5 points from the show last week. 18,000 contracts on the tape for UVIX. That's pretty good considering the ADV is only 17,000. That's up about 2,000 from this time last week. Let's look really quickly. The big dog today, 10 half puts in March going up 1,600 times. Those are probably not going to pay off, I guess, unless we see some crazy moves out there, but we shall see. Maybe we'll get into that a little bit on options oddities. The big dog in UVIX right now, still almost 21,000 of these April 12s that were looking a heck of a lot better last week than they are right now. UVXY 7 even right now, down about 1/3 of a point from last week. Paper on the tape out there today, though, 127,000 contracts. So UVXY putting up some numbers. That's against an ADV of 112,000, which in and of itself is already up about 12,000 on the week. So UVXY saying, look out above for me. They're on the rampage in terms of volume. What's lighting it up out there today? It's 16,000 of the March 7 puts, so right at that strike as well. So people like to play close to the fire on these products. 11 call, 11 strike, 7 strike here in UVXY, 11 strike in UVIX. We'll see how those work out. The big dog in UVIX right now, 20,000 of the March 7 calls. So those are interesting out there right now. And then we have VXX bringing up the rear, 14 and about 1/3, down about 0.5 point from this time last week. Decent paper out there as well, 67,000. The ADV is 71,000. That's moving in the right direction, up 4,000 right now. And the top position in VXX right now, almost 31,000 of the March 14 puts. So it seems like we got a lot of nail biters going into the expiration at the end of the day here, listeners. 14 puts in VXX. We've got 7 calls in UVXY. We've got, forget about the 12 calls in UVIX, but outside of those, we got a lot of people kind of staying close to their keyboards, I think, towards the end of the day, as is always the case with these products. And it's time for us to stay close to a little thing called VIX, because it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And let's just dive right into it, listeners. I mentioned I took an early victory at the start of the show. I've learned I was at a 1485 this week. We were at a 1495 right when we kicked off the show. That puts us right within our 10th of a point margin of victory. Of course, it doesn't work that way in real life. I wish it did. We're at a 1504 right now. I might just talk a little bit, see if I can talk down VIX a little bit. So I was there at the beginning of the show, not quite there right now, but pretty darn close for me. The meatball was at a 1661, so no joy for him. One of the Thompson twins, Mike, was at a 1412, so he was the next closest. And then Matt was feeling his oats to the upside at a 1801. No joy for the mullet and Tulum crowd out there this week. All right, Rob, I hope our producers prepared you, because this is where it gets difficult. This is where it gets dangerous. What are you feeling for VIX this time next week, sir?
Well, I'm thinking AI stocks are going to continue to go up. I think, which is going to drive, sort of talked about earlier. I think FOMC, there might be some interesting stuff there. So I'm going to go 16.5.
Oh, feeling a little juice is Rob. 16.5 out there. And let's see, I was the closest. I will go last just for fun. I'll let the Rock Lobster go next. Mr. Rock Lobster, sir, what are you feeling for this time next week, sir?
I'm just going to go with the pattern of vol continuing to go up, and I don't see anything to break it. So let's see, Rob said 16.5. I don't want to scum them for a penny. You know what? I will settle somewhere in the middle. I'm going to say higher than today, though. I'm going to go 15.99.
Oh, 15.99. Feeling a little bit of juice as well. And I was feeling around the same level we were a week ago on the show. This week, we're pretty close, a little bit higher, obviously. I don't mind something like that along these lines again. So I'm going to think not quite as high as these two fellows here, but I'm going to say a little bit frothier than we are right now. I'm going to say a 15.35. So all above picks this week. It's a rare time for that. That means, of course, look out below. 12 handle coming for this time next week. That will do it for us on Volatility Views. But before we go, listeners, let's go around the horn. Rob, a good job in the guest seat today, sir. If folks want to check out what you have cooking in the land of Rival, including maybe some of that forthcoming educational and training content, where should they go? What should they do?
Check out rivalsystems.com.
Well, there you go. Right to the point. I like it. Out there. Rivalsystems.com, the place to go to kick the tires and light the fires. And Mr. Rock Lobster, same question for you. If they want more pit goodness in their lives, where should they go? What should they do?
Go to optionbit.com, 888-TRADE-01. And if you heard this show, you get 10% off anything. It's a great, great deal.
I love how Rob's never been on before, and he was ready to go right away. And you've been doing that plug for a decade, and it still always comes as a surprise to you every time.
It's still like pulling teeth.
Optionpit.com. Give him a follow on the old Twitters as well. He's always tweeting out some snarky comment about vol. At OptionVol is the place to go to find him. That is going to do it for us on Volatility Views today. It's also going to do it for us on the on-demand side. So if you're one of our many on-demand podcast listeners, that's going to conclude our broadcast week with you. Thank you for joining us throughout the week. If you missed anything, of course, it's there on the old podcast feed. I know a lot of you like to take your weekend break from the markets and tune into Vol Views the next day. So we like you all out there. If you're hanging out in the pro, or if you want to join the pro, theoptionsinsider.com/pro. That's the only place you can go to get access to options oddities that will be coming up shortly after this program. Then back again on Monday with the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.